What's good, guys? Welcome back to my YouTube channel, IpBoyles. Today's video, I'm going to teach you guys the best strategy that is going to make you $500 every week. So if you watch, we have a list of pairs here and we are going to start from the last one. This pair has been on uptrend or this where price is giving us first touch, and here is the second touch, and there is the third touch, which is called the support level. So after the price has given us support level, we go to the resistance level where price is giving us also the higher highs and the higher lows. So once price is giving us a higher highs and a higher lows, we identify it as an uptrending market. Your Fibonacci from your swing low to your swing high point. Your demand zones below the 50% retracement of the Fibonacci and wait for price to come below your demand zones before you can take any trade entries. Wait for price to pull back to your first demand zone. Then after the first demand zone, you want to see a rejection to the upside. After that, you go to your origin demand zone. That's where price will be giving you a confirmation. From there, you target your first TP at the high of the high. Then after that, you go for the highest extension of your Fibonacci. Bring out your long position from your tools, place it at the origin demand zone where price gave you a confirmation. Place stop below the zones. Then after that, you target the first high, then go for the Fibonacci extension. The next pair that we are going to have here is NZD-USD. NZD-USD, if you watch, you see that NZD-USD has been on downtrend and which is already forming a bearish flag. A bearish flag is a bearish market pattern that's always, once after it formed, it's always break below the support of the range, which you can see we are having the most touches from the first touch, second touch and the third touch, and which you can see that price has already broken below the bearish flag pattern. This is a retail trading pattern which gives you a confirmation for cool market selling. Bearish flag is a continuational pattern and this is how it looks like. It gives you a uptrending direction to the upside, to the downside, which gives you high highs and higher lows. Then you get to wait for markets to break below the support. After breaking below the support, give you a retest before you start going to the downside. Draw your Fibonacci from the swing high to the swing low, then wait for price to pull back to your area of support. Draw your first supply zone and also draw your second supply zone. After drawing your supply zone, all you need to do is to wait for price to pull back to your first supply zone, which is on the 50% discount of the Fibonacci. Then let the price reject a little bit. You can take position from there, but the main rejection have to be on the origin rejection where price is going to give you a confirmation to drop. Bring out your position calculator, extend your TP where you want to take your first TP and second TP. Then after that, place your position, your stop loss above the supply zone. So we are on our US start. One thing I love about this strategy is that it's very simple to apply, and one thing is that once you start applying it, it's very easy to understand. And once you see on a higher time frame, we have this trend line break, and after this trend line break, you see that we are having the most touches, the first touch, the second touch, and right there is the third touch, and I'm going to apply it. One thing is that you must make sure you cater for the most touches of your trend line, and then after you have the first touches and the line has already broken, all you need to go for the support level. So we apply the support level from the swing low, and which you see that we are having the most touches. Then once you apply it, you leave it. We have the first touch and the second touch, so we are waiting for the third touch of the trend line. After the trend line has been broken, you will see that we have the higher highs, higher low, higher highs, higher low, higher highs, higher low and high highs. Then the previous low has been broken. Then after this previous low has been broken, draw your Fibonacci from the swing low to the swing high. Draw your demand zones from the 50% below the 50%. Then after drawing your demand zone from the 50%, you draw the origin demand zone also from the 50% below the 50% or 61.8% of the Fibonacci. I would love to channel my trend line to the resistance level, where we are going to have the most touches, the first touch and the second touch, and we wait for the third touch. Once we go to the support side, you will see that we had the first touch, second touch, and we are waiting for the market to give us the third touch. Bring out your position, then channel your TP where you want to take your TP, first TP and second TP. Place your stops below your demand zones. Alright guys, we are now on the good pair. This pair is very volatile and there is a lot of money in this pair, and a lot of new traders, beginners love trading this pair. All you need to do is to draw your resistance level from the most touches, where price is having the most touches, and also draw your support level where price is also having the most touches of the weeks. So I told you that we have so many types of markets. We have the uptrending market, downtrending market, and also sideways market. The sideways market doesn't move, it's always good from the support to the resistance, giving the most touches in the market. And also if you are a very beginner trader, you can also trade this type of market. So after that, all you need to do is to wait for price to break from the below of the market, give you a retest from the support, or you wait for retracement. The market can still break from the resistance side, give you a retest before going up. Take your Fibonacci from the swing low to the swing high, then wait for the retracement of the Fibonacci above the 50% or 61.8% of the Fibonacci retracement. Then you can target your TP where you want to take your TP1 or where you want to take your TP2. Always wait for price to retrace or pull back above or below your 50% discount of your Fibonacci before you take any position. I would like to delete this Fibonacci extension, then I bring out the Fibonacci base extension, which you are going to draw from the swing high to the swing low, then extend it to the high. So this two is kind of showing you the retracement price. We have the premium price and the discount price of the Fibonacci. So draw your supply zone, then after drawing your supply zone, you apply it to your chart and wait for price to retrace above your supply zone, then before you can target or wait for confirmation for price to give you a profitable movement. After that, bring out your short positions, place stops above your supply zones, then target your TP, your first TP below the low, then you can extend it to your TP2. This is my favorite pair, Euro USD, and as you can see on this pair, I had a lot of demand and supply zone which is drawn below and above it. One thing I love about this pair is that it's less volatile and it respects order flow in the market. Scatter the most touches of your trend line to the support level, and also scatter the most touches of your trend line to the resistance level, and make sure that you have the most touches of the trend line to which determines your resistance level of the market. Pull your Fibonacci from the swing low to the swing high of the trend. Since we are on the uptrending market, or we are looking for the market to go below our 50%, hit our demand zone, give us a confirmation for entry before we take any buy setup. For the market to do what we want the market to pull back a little bit to a support level at the upside, then bounce on our first demand zone or second demand zone before we can anticipate the touch of trend and confirmation to go up. So once that is being done, all we need to do is to be calm, stay calm, and wait price to react off our trend line before we can do anything to move to the upside direction. If you are interested in knowing the kind of configuration of my Fibonacci and how my station go to your tools, then click on Fibonacci retracement, make sure you add it to your favorites, then go to the settings. Once you go to the settings, you come out to this page where you're going to see a lot of numbers, configuration. All you need to do is to just unclick fews that you don't want to use. So these are ones that you really need in this kind of trading strategy. You need the zero swing low, you need the 38.2%, you need the 61.8%, and you still need the 100 level, which is the one level. And you don't need this. All you need is the extension level, which is the 27.2%. and the other ones, just look at them. You see the ones that I unclicked on this video. The blue ones that is with the good mark are ones that you really need, and the ones that are dashed, that are not clicked, are the ones that you don't really need. If you like this kind of video, make sure you share and subscribe to this channel for more content like this. See you guys in the next one.